Welcome to Abidi Stock Market Learning. The beginning is most important. In this video, I am going to explain you about the pump and dump scheme in the stock market. These are the list of topics which I am going to discuss in more detail. Let's start with the topic number 1. What is the pump and dump scheme in the stock market? A pump and dump scheme is a type of a stock market manipulation in which the frauder artificially inflate the price of a stock, typically a small or the micro cap company, through the false or the misleading statement or the other manipulative tactics. Once the stock price has been driven up, the frauder sell the shares at the profit, leave the other investor with the worthless stock. In this scheme, the fraudsters typically use the various tactics to artificially inflate the stock price. For example, they might spread the rumors or the false information about the company to create the hype and generate the interest among the investors. They might also use misleading or the exaggerated promotional material to convince the investor that the stock is profitable and the valuable in the current market. Once the stock price has been pumped up, the fraudsters will sell the shares, often in the large quantity, cause the stock price to plummet. This leaves other investors with the shares that are now worth significant less than they paid for them. The fraudsters walk away with the profit while other investors suffer the losses. The plump and dump schemes are illegal and can result in the criminal charges and the significant financial penalties for those involved. It is important for the investor to do their due diligence and the thoughtful research and investment opportunity before committing any funds. Moving on to the topic number 2. What is the cycle of the pump and dump scheme in the stock market? The cycle of the share market pump and dump scheme typically involves the several phases. Accumulation, the frauder being buying up the shares of the small or the mid cap companies that is not widely followed by the investor. Promotion, the frauders start promoting the stock through the various channels such as the email, newsletters, paid website, social media platform, and the online forums. They might also issue the misleading or the false press release to generate the hype around the stock. Peak, the stock price reaches its peak as a result of the promotion and the many investors being buying the shares in the hope of making profit. Dump, the fraudsters start selling their shares often in the large quantity, causing the stock price to plummet. Other investors panic and sell their shares, result in the further decline in the stock prices. Disappear, the hype around the stock fade as the investor realize they have been dumped. The stock price eventually return to its the pre-promotion level or the even lower, leaving many investors with the significant losses. It is important to note that the exact cycle can vary depend on the specific of the scheme and the tactic used by the frauders. However, the basic patterns are accumulation, promotion, peak, dump and disappear is the common to many pump and dump scheme. Moving on to the topic number 3. What are the type of pump and dump scheme in the stock market? The different pump and dump scheme that may be used by the frauders are as follow. The classic pump and dump scheme. This scheme involves the manipulation of information regarding a company and its stock via telephone, fake news release, and the distribution of the some inside information that can boost the stock price. Boiler room, a small brokerage firm employs the several brokers that use the dishonest sales practice to the sell investment to the investor. The brokers sell the stock by the cold calling. They sell as many shares as possible required to boost the price. Once the stock price rises, the brokerage firm sells its portions of the stock for the hefty profit. Wrong number scheme. You may receive the voice email with an insider investment. The frauder tried to make it look like the voicemail was accidentally sent to you. It is a target action to attract the attentions of the potential investor to the particular stock and the boost the demand of his stock. Moving on to the topic number 4, how the promoters are doing the promotions of the pump and dump scheme in the stock market. Promoters of the stock market pump and dump scheme typically use a range of tactics to promote the stock and create the hype around it. Here are the some common methods used for the stock promotion. Unsolicited email. Fraudster often send the unsolicited email to the potential investor, touting a company stock as a hot investment opportunity. The email may contain the misleading or the false information about the company financials or the future prospects. Social media. Promoter may use the social media platforms such as the YouTube, Twitter, Facebook, LinkedIn to promote a stock and create the hype around it. They may post the message or the article that advertise the stock as a profitable and the valuable shares and urge people to buy. Paid promotion. Promoter may pay for the advertisement on the financial website or the newsletter, or they may pay the individual to promote the stock on their behalf. Pump and dump website. Some promoters create a website or the message board dedicated to the promoting a particular stock. They may use a fake review or the testimonial to create the appearance of a large and the enthusiastic investor base. Cold calling. Promoters may make the unsolicited phone call to the potential investor, urging them to buy a particular stock. It is important to be skeptical for any unsolicited investment advices or the promotion and to do your own research before making any investment decision. Be on the lookout for the red flags such as the overly promoted material, sudden spike in the stock prices, and the high trading volumes. By doing your due diligence and being cautious, you can help protect yourself from falling the victim to the share market pump and dump scheme. Moving on to the topic number 5, what is the due diligence of the pump and dump scheme in the stock market? Due diligence in the context of the share market pump and dump scheme refer to the process of researching a company and its management team to determine whether an investment opportunity is a legitimated and whether it's carried any risk. Here are some key steps that the investor can take as a part of their due diligence. Research the company. Start by researching the company's background, history, and the financials. Look for the information about its revenue, earning, and the profit margin, as well as any potential red flag such as the regulatory violations or the lawsuits. Look at the management team. Research the individual who are leading the company. Look for the information about their background, qualification, and the track records. You should also look for any potential conflict of interest or the past instances of fraud. Analyze the financial statement. Take a close look of the company's financial statement, including its balance sheet, income statement, and the cash flow statement. Look for any irregularities or the inconsistencies that could indicate the fraudulent activity. Investigate the stock promoters. If a stock is being heavily promoted, it is important to research the individual or the companies behind their promotion. Look for any signs of fraud or the unethical behaviors. Checking the trading volumes. Checking the trading volumes as a stock to determine whether there has been any unusual activity, such as the sudden spike in the trading volume. Consult with the financial advisor. If you are unusual about the legitimacy of any investment opportunity, it is a good idea to consult with the financial advisor or the other professionals who can provide the guidance and the advices. By conducting due diligence, investor can make more information decision about their investment and avoid falling victim to the share market pump and dump scheme. Moving on to the topic number 6. Here are some signs that a stock might be a part of a pump and dump scheme. Sudden price increases. If a stock suddenly experiences an abnormal price increases without any significant company news or the financial report, it could be a sign of the pump and dump scheme. High trading volume. A pump and dump stock often experiences a high trading volume. which can be an indications of the large number of investors buying the stock. Unsubstantiated claim: if the company or the promoter behind the stock are making the unsubstantiated claim about the company's future prospects or the potential, it could be the sign of the pump and dump scheme. Promotional activities: a pump and dump stock is oftenly promoted through the spam email, social media, or the other form of online advertising to lure the unsuspecting investor into the buying stock. Insider selling: if the company insiders are selling the shares while the share price is rising, it could be the sign of the pump and dump scheme. Moving on to the topic number 7: how to prevent from the pump and dump scheme in the stock market. There are several steps that investor can take to protect themselves from the share market pump and dump scheme. Do your research. Before investing in any stock, it is important to do your own research and make sure that the company is legitimated and has a strong business plan. You should also research the individual behind the company to ensure that they have a good reputation. Avoid the unsolicited investment advices. Be aware of the unsolicited investment advices from the strangers, especially if it is come into the form of the spam email, social media messages, or the cold calls. The frauder often use this tactic to promote their schemes. Watch out for the red flags. Be on the lookout for the red flags that suggested a stock being artificially inflated. For example, if a company's stock price is suddenly spiked without an apparent reason, or if there is a lot of hype or the buzz surrounded the stock, it is important to be the cautious. Be skeptical of the promotion material. Be skeptical of the promotion material that makes the bold claim about the potential returns on an investment. It is important to read the fine prints and do your own research before investing. Avoid investing in the low volume stock. Low volume stocks are often targeted for the pump and dump scheme because they are easier to manipulate. If you do choose to invest in the low volume stock, be the extra cautious and do your own research. Report the suspected fraud. If you suspected that you have been the victim of the pump and dump scheme, or if you have the information about the potential scheme, it is important to report it to the relevant authorities, such as the Security and the Exchange Commission or the local security regulators. This can help to prevent others from falling the victims to the scheme. If you suspected or the pump and dump scheme fraud in the Indian stock market, you can report it to the SEBI, the Security and Exchange Board of India, which is the regulatory authority for the security market in India. Moving on to the topic number 8: what is the SEBI guideline on the pump and dump scheme in the stock market? SEBI, the Security and the Exchange Board of India, has issued the guideline on the share market pump and dump scheme in order to protect the investor from the fraudulent activity in the stock market. Pump and dump schemes involves the artificially inflating the price of a stock by spreading the false or the misleading information about the company and then sell the stock at the inflated price to the unsuspecting investor. The schemes are illegal and cause the insignificant harm to the investor. SEBI has issued the following guideline to prevent the pump and dump scheme. The company must disclose all the material information about the businesses to the stock exchanges in the timely and the accurate manner. Any person who spread the false or the misleading information about the company with the intent to manipulate the stock prices will be the subject to the strict penalties. Stock exchanges must have the surveillance system in place to detect any suspicious trading activity. SEBI will investigate any complaint of the market manipulations or the other fraudulent activities and take the appropriate action against those involvement. Investors should exercise the cautious and conduct through the research before investing in any stock. SEBI has also issued the guideline for the market intermediaries such as the broker, sub-broker, or the depository participant to ensure that they are not involved in any fraudulent activities. SEBI guideline aims to promote the fair and the transparent trading practices in the stock market to protect the investor from the market manipulations and the fraud. These point has been taken from the internet. Moving on to the last topic of the video. Here are the steps you can follow to report a pump and dump scheme fraud to the SEBI website. Visit the SEBI website, that is www.thescore.gov.in, and click on the complaint tab on the top menu. From the drop down menu, select the complaint redirect system, that is scores. If you have not registered on the scores website, click on the registration here and click and create a new account. If you are already registered, log in into your account. Click on the file complaint and select the category of a complaint as the market manipulation. Fill the detail of the complaint, including the name of the company, the date of the suspected manipulation, and any evidences you have to support your claim. Attach any supporting document such as the email, messages, or the screenshot that you may have. After providing all the information, submit the complaint. Once you submit the complaint, the SEBI will investigate the matter and take the appropriate action. It is essential to provide as much information and evidences as possible to help SEBI in their investigation. If you have any additional information or updates on the matter, you can also update on your complaint on SCORE. That's it for the video. You should take your time to understand all the concepts discussed in this video. Take your notes and go back from time to time to review the strategy which has been shared with you. Please subscribe to our channel and click on the bell icon to get all the notification for our upcoming videos. Please like the videos and provide your comments if any. If you think that the content of this video are knowledgeable, then please share this video with your colleagues and friends. Once again, thank you for watching the entire video.